Welcome to my midweek update where I make trading simple. Well, this week we're going to talk about a couple interesting things and developments. First of all, we're going to talk about what's really keeping the stock market up. And we're also going to talk about that the banks, they're not disclosing their losses. We're talking to big banks, $575 billion, but nobody knows about it because they're not disclosed. So another interesting thing that's happened for the market is that the reverse repos have ended. What does that mean? It's really simple. I know it sounds complicated, but trust me, look at this. This is how simple it is. So a reverse repo is simple. Here's your bank. What the bank does, it will loan money to the Federal Reserve. So banks have cash. And when they have enough cash, they'll loan money. You can see all the money they loan to the banks, and they get interest. Now that helps them, especially when they have undisclosed losses of $575 billion. That interest they receive, helps them. They depend on it. Now look what's happened here. So since 2023, or about 23, okay, look at this. It's not happening. So the Fed said, no, okay, we don't need your money. We're not going to pay any interest. And that's hurting the banks. However, we're going to show you on the chart why bank stocks, money's starting to rotate into the bank stocks out of tech. But before that, I have something else very interesting to show you that's going to be helpful to you. Let's get this out of the way. And okay, this here is margin debt. Look at this margin debt. We've never had margin debt this high. It's increased, okay, from 500 or 600 billion to $1 trillion. That's mostly in 2025 right here. Look, that's just nuts. What's that mean? It means that what's really keeping the stock market up is that money that keeps coming in, where the tourist investors, they keep on borrowing, and they keep buying the same 5, 6 stocks out of the Magnificent Seven, Nvidia being the biggest one. They keep buying the same stocks over and over and over, 50 billion a month, and they're borrowing money to do it. We've never seen that. The last time we seen this happen was right before the crash of 1999-2000, the dot-com crash. Right before that, we had the same kind of thing going on, but this is far worse. We also saw the same thing right before the 2008 crash. So are they correlated? Looks like they are. I don't know, but it's sure interesting to take a look at this, because if we had that same problem back in 2000 and it's the same problem in 2008, where once you get just a little crack in one of these tech stocks and margin calls start hitting, you get the crashes. So that's something we got to keep an eye on. I mean, that's really very important to watch. So that's what's going on. Now I want to show you, we're talking about the banks, and everybody, again, keeps asking, how does this market keep going up, right? Well, it'll keep going up in spite of the fact we have a record $1 trillion stock margin debt. Keeps going up in spite of a record $22 trillion increase in money supply. It keeps going up regardless of a record $13 trillion in corporate debt, $18 trillion in consumer debt. And it keeps going up in spite of the fact that banks are disclosing their $575 billion in losses. But yet the market keeps going up. But why? Again, it's all about the margin debt. So we're starting to see a rotation out of tech stocks into bank stocks. So let's take a look. We'll see what's going on. Now, our gold stocks have been doing just fantastic, but look at this. So the bank stocks are ready to start to look to break out. We just need a little more buying volume. Look at JP Morgan. Nice pattern here, ready to break out. Goldman Sachs, ready to break out. And that's taken the place of the tech stocks. See how they're rolling over? So tech stocks are rolling over while money is going back from those stocks into your banks. So keep an eye on that. Gold is going to continue to rally. That we know that for a fact. We've seen it. We've been in gold for quite a bit of time now. So let's take a look at our GDX. So I prefer the gold, the drillers, okay, the miners, because when you got massive amount of gold buying going on now, where people are dumping their tech stocks, they're going into gold, they're dumping their bonds, they're going into gold. I mean, people that never bought gold before. Well, that means GDX, the miners, are really, really busy getting that gold out of the ground. So I like the miners, and we've been doing terrific in the miners. Look at this. We had a beautiful consolidation pattern breakout, and we had a nice flag pattern right here. Look at that little flag pattern. That broke out nicely. Then we had another consolidation breaking out. And look at the volume. We got good volume too. So I think that, again, the banks look really good, and the tech stocks, not so good. The tech stocks are just having a hell of a problem. Now, silver's been going up too. So that's where we've been putting our money, is in, again, we're starting to put money into the banks, and we certainly put a lot of money into gold. And in the tech stocks, we have been taking money out of the tech stocks, and you see why, because they're just having some real serious problems here. They're rolling over. Now, as far as anything else that's been doing good is, again, copper hasn't been doing well. So we're just staying with the silver and with our GDX. That's helping us out. And again, the leisure stocks we're watching, sometimes the leisure stocks will pick up. Like, for example, RCL, that's got a nice little pattern. And that's really what we're doing right now. So with the idea, the only thing that's holding up this market is historic margin debt. I mean, that's nuts, $1 trillion. We've never seen that before. So everybody keeps asking, why does the market keep going up in spite of all these crazy problems? It's because that margin debt, that's what's doing it. And the minute they start running out of money, or you get a little bit of crack, let's say Nvidia doesn't report well, all of a sudden you get a crack in Nvidia, you're going to see that unravel quickly, and that's when you get a correction. Otherwise, they can keep this market going up for a very, very long time. So I hope you enjoyed this. And for more information on how to trade a stock market like this, go to philsgang.com, a stock trading education group for over 25 years.